Welcome back to the Financial Autonomy Podcast. My name's Paul Benson, financial planner and practice principal at Guidance Financial Services. Relationship breakdowns are a fact of life for many of us. They typically require a significant reset, with our financial lives being just one, albeit very significant, element. Helping people get back on their feet financially following a divorce and regaining confidence in their long-term outlook is a common assignment for us here at Guidance. And whilst everyone's circumstances and goals are unique, in this episode I thought I'd share with you a rough outline of what a post-divorce financial roadmap might look like. If you're working through this phase of life at present, I hope you find it helpful. Step 1, identify your goals. Previously, your goals were intertwined with another person, and perhaps that meant compromises were made. With assets split, early retirement might now be off the table. Perhaps there's no longer the need to remain in your current city or even perhaps the current country. Everything's on the table as you plan your next chapter, and you can do whatever really you want to do. Spend some time exploring all the possible goals that you might wish to pursue. Go wide and then narrow them down. A roadmap won't help if the destination is unclear. Next, how much longer will you be in the workforce? With clarity here, we can understand whether you need to be focusing on building your super or clearing a mortgage, adjusting your spending, or starting an investment portfolio. Post-divorce, there's a need to rebuild your asset base. Usually, one member of the couple retains the home, but has a low level of super savings, whilst the other member of the couple often walks away with a large super balance, but not owning the roof over their head. Typically then, once goals have been clearly identified, we're looking to solve for one of these two problems. The amount of years you have left in paid employment is a key input as to how you solve for either. Okay, housing would be the next port of call. Now, if you come away from the divorce retaining the home, then the consideration needs to be how this plays out long term. So do you stay in the current home until the children have moved out and then downsize with the freed up capital being able to boost your super? Perhaps you could even downsize now if kids aren't a consideration. Alternatively, perhaps you've retained the home, but it comes attached with a mortgage. Well, are you able to sustain that mortgage now that there's just one wage coming into the household? On the other side of the fence, if you've left the relationship without a home, are you happy renting? Or is it a number one priority for you to purchase quickly? If the asset split has been such that you have a very large super balance, perhaps the home purchase needs to wait until you can access those funds. Keep in mind the old saying that we can't eat bricks. Post-divorce, there can be a temptation to end up with a balance sheet very heavily weighted towards the home, with little in the way of income-producing assets that will provide you with a comfortable lifestyle, particularly once you've retired. Cash flow clarity would be the next port of call. One of the biggest adjustments post-divorce is that the same household costs are now being carried by one income instead of two. Housing, utilities, insurances, groceries, they rarely halve just because the household's been split in two. Take the time to rebuild your personal budget so you understand what your life costs now. From there, you can decide whether the current arrangements are suitable or whether some change is required. And that might mean circling back in terms of the housing situation because, of course, in terms of your outgoings, particularly if you've got a mortgage, that's often the biggest consideration. Estate planning would be a key element in a post-divorce roadmap. So if you haven't done it already, you might want to update the beneficiaries on your super fund. it could be that the appropriate course is, rather than nominate any individual, you nominate the personal legal representative. You'll see that as one of the options on the form. If you choose this option, it just means that your super will feed into the rest of your estate and be dealt with in accordance with your will. Upon death, superannuation is tax-free to a spouse. So if you're partnered, it's usually a bit of a no-brainer to have your spouse as the beneficiary. But of course, post-divorce, that's no longer applicable. If your super goes to adult children, then there's some tax that they have to pay. And if there's no one else in fact, with super, you can't nominate anyone else, right? Spouse or children, there's no ability to nominate siblings or nieces and nephews. So using that personal legal representative as the one that you nominate can give you a bit of flexibility. Now, of course, all this assumes that you've updated your will. So sit down with your solicitor, talk this through, get the new will done to reflect your wishes post-divorce, and ensure that superannuation is a discussion or an element of that discussion. Okay, insurance review is perhaps the last point that I would suggest you want to jump onto post-divorce. So perhaps previously you had life insurance so that if you passed away, your former partner would have enough to clear the mortgage or maybe just take some time out of the workforce. Well, post-divorce, that need's no longer valid, and so the cost of that insurance is just a waste of money, and usually that insurance runs through your super fund, so it's harming your ultimate retirement benefit. Conversely, though, perhaps there's a greater need for the likes of trauma cover and income protection. So as a refresher, trauma cover, a lump sum if you suffer one of, usually there's about 30 or 40 conditions, but statistically it's typically either malignant cancer or a heart attack, right? They're the most common reasons that trauma gets paid out. So you suffer one of those and it's a lump sum to get you through, right? Take all the financial pressure off. Income protection, of course, that replaces 3/4 of your income if you're unable to work due to illness or injury. Now, when you were a couple, there was the extra security of knowing that if one of you suffered a significant illness or injury, the other would continue working, and so there'd be some income coming into the household. But now you need to be self-reliant, and so appropriate personal insurance becomes much more important. And just finally, so we've gone through those 6 elements that I think would be common in a post-divorce roadmap. And in fact, it might be worth just running through to refresh. So they were, number 1, identify your goals. Number 2, how much longer will you be in the workforce? Have we got 3 years to rebuild here, or have we got 20? That makes a big difference. Housing, what's happening there? Cash flow clarity. Again, bills probably haven't halved, so how are things working there? Fix up your estate planning, your wills, your superannuation beneficiaries, and review your insurance because your needs have probably changed. So they're the 6 points that I would suggest you focus on. But I just wanted to leave, I guess, with a final thought, which is that divorce can leave you feeling financially uncertain. There's a lot of challenges and emotions post-divorce, but certainly that financial uncertainty is a big one, even if actually your balance sheet is quite strong and to an outsider looking in, you're in a perfectly stable financial position. So take some time to rebuild confidence in your decision making. The goal is not to solve everything immediately, but just to gradually put pieces back together in a way that supports the next phase of your life. So don't be too hard on yourself. Take your time and get it right. But hopefully, anyway, with this roadmap, with these 6 areas for you to think about, it might just help you move some steps forward. Of course, if you need any help with any of this, as I mentioned at the top, this episode come up because this is a topic that we see often. It's a key reason that people often reach out to a financial planner for some help. So if you're in that situation, jump on the website. It's guidancefs.com.au. Book a meeting, and we can explore how we can support you. All right. Well, thank you for listening once again, and I'll be back in a fortnight's time. Of course, next week you'll have Nick with another Wealth Builder episode. Bye for now.